Paul, it looks like Japanese bonds are joining the global bond slide.
Yeah, good morning, Lizzie. Normally, if you ask me to do a long hit talking about Japanese government bonds, I might think that everybody's in for a snooze fest, but not at the moment. A market that's been sleepy for most of the last couple of decades is really coming to life now, and that's because we're seeing ever-rising yields at the back end of the yield curve in particular, signalling a lack of demand for the Japanese government bonds. Now, there are reasons for this that are kind of universal and common across global debt markets, and there are some particular reasons why Japan is in focus at the moment and feeling that pressure. I think if you're looking at the inflation outlook globally, there are concerns about that, what tariffs will do, and inflation is toxic for government bond yields, which pay you a fixed amount every single year because that value of those payments diminishes. In Japan, it's been elevated. It's been above the central bank's target for quite a while. Deliberately, remember, Japan has had decades of no inflation whatsoever, and so they want some inflation, just not too much. We're getting to the point probably where the BOJ will be raising interest rates again, and that may hurt bonds at the short end of the yield curve as well. So some tensions there. Then there's the supply factor as well. People are worried about how much debt is being sold locally and globally. In Japan, it's particularly pertinent because the debt to GDP ratio is already extremely high. And so that means that every time they're borrowing, particularly at higher yields, it's becoming more costly for the government. And this is where the politics comes into play. The Prime Minister is under pressure. He's under pressure because the economy is creaking and people are unhappy. He's lost some of his allies within the government, which suggests that in order for him to hang on, he's going to have to loosen the purse strings and spend some more money on social support, those kinds of things. Or if he's toppled and someone else replaces him, likely they come in and spend even more money. Neither of those are good scenarios for bonds particularly. So again, you see that pressure, the idea that there's going to be more supply coming to the market, and that's going to weigh on those yields over time. So precarious times indeed for Japan. Add into that the sort of global supply context where we're really seeing a massive wave of corporate issuance, and that puts the focus right now on an auction that's coming up in Japan, 30-year bonds tomorrow. Everyone's going to be paying a lot of attention. We haven't seen a lot of buying interest recently from the typical people that would take down that kind of security. The insurance companies, the large banks, foreign investors who see attractive yields when they put in currency hedges. So the market is worried about whether investors will show up, what the sort of demand will look like, and whether that's going to see us spiraling even higher on those yields at the back end of the curve.